every day this week I have been fighting this rain, trying to do these videos outside, and it just coincidentally just seems to want to rain as soon as I come out here. I'm getting chased by the leaf blowers, I'm getting chased by the rain. What's next? I love you guys. I really appreciate everybody always being here, so I do what it takes to get out here as much as possible. A few people have mentioned in the past that whenever it's raining that maybe I should do, a live stream from my home office or something like that, and I may do that in the future, but I suspect that you guys are not going to like those videos as much as you like these. And honestly, I don't blame you because I love being out here. You guys like seeing the neighborhoods. I like getting out, getting some fresh air, getting some exercise, and just talking about how insane everything is right now. And speaking of insane, well, here's an update on what's happening with condos down here in Florida. Now, we already know that condo sales are off, and all real estate sales are off, but condo sales are down pretty notably right now because a lot of buyers are afraid to buy a condo because nobody knows what's going to happen whenever the boot hits the ground and all the new condo laws kick in at the beginning of 2025. The way it stands right now is once a building is 30 years old or older and is 3 stories tall or taller, it needs to go through a milestone inspection to make sure that everything is on the up and up and the building is safe structurally. And if you're within 3 miles of the coastline, then that shrinks down to every 25 years. But the thing is, when 2025 comes, all buildings that are more than 30 years old are gonna have to go through this. A lot of would-be condo buyers are on the fence right now and not sure what to do. And I don't blame them because there is a lot of uncertainty going on out there with this. But there's a few things that buyers need to understand about this if you are considering buying a condo here in Florida, now that all these new rules are going to be coming up very soon, is number one, these new stipulations are good for everyone in the long term, even though they can be costly because it's going to help increase the safety in order to avoid further condo collapses like we saw in Surfside. Also, as a buyer, this is going to give you access to more information to help you make a good decision when you're buying a property, because the new law will entitle you as the buyer a copy of the milestone inspection of the building when they enter into a contract, as well as a structural integrity reserve study, which notes the amount of funds that are needed in order to be in the reserves for future major repairs and replacement costs for the condo. This is going to give buyers more transparency into what type of repairs are going to be needed once these studies are done and potentially how much that's going to cost. So at least you won't be walking into this whole thing blindsided. But the thing is, if the building doesn't have a copy of this yet, or they haven't had the reserve study done yet, then there's no way you can get your hands on a copy of this. And obviously this affects older buildings far more than new buildings, but the reality is, guys, vast majority of buildings here in Florida are older than 30 years old. And all the ones that aren't, the ones that are newer, are usually quite a bit more expensive than the older counterparts because new buildings just cost more, especially brand new construction that are built within the last few years. These buildings typically cost 5-10 times more than surrounding buildings because they're just built to luxury standards now. Like, there is no middle ground anymore. You don't see condos for the most part being built for the average Joe. It's being built for the average millionaire. But this hesitancy is starting to show up in the condo sale numbers because in Palm Beach County, the condo sales are down 21.4% year over year. In Broward County, the condo sales are down 28.7% year over year. And in Miami-Dade County, the condo sales actually are down 43.8%. But even though the condo sales are down, curiously enough, condo prices are actually up, which doesn't really make a lot of sense, but that's the reality. But here's the other thing that potential condo buyers need to understand about all of this, is that there's probably going to be one of two things happening in a lot of older buildings that need a lot of repairs. Number one, they might actually get bought out by a developer, and a developer will come in, pay everyone fair market value, or maybe even a little higher in some cases, to sell them their units And once they buy out the majority, then they can take over the condo, terminate the condo, and then eventually demolish the building and build something brand new in its place. I've already showed you guys several examples of where this is happening right here in Miami Beach. But the other alternative is people don't want to sell and they opt to pay the extra money that it takes to get the building up to par with the new laws, which is probably going to cost a couple $1 billion in a lot of cases. Many different buildings are going to be facing large bills like that. There's no denying it. But here's the interesting thing, guys. Before any of this ever happened, okay, you see buildings here that go through total renovations, right? They go through the entire building being completely renovated, and afterwards, the building prices double, okay? So I feel like the same thing is very likely to happen here. It's going to have maybe a negative effect on the market in the beginning as people get blindsided by the cost that don't know about this, and they go to sell their units because they can't afford the increased cost to keep the building up. But after all this is done, once people like that sell to someone else who wants to pay the extra because they know that the building is going to be in much better shape, not only financially but structurally, after all the repairs are done, that's when the property values go up. And I've seen this happen time and time again here in Miami Beach, where you've had these old buildings that were built in like the 50s, and they go in, it takes like 5 years to renovate the entire place. They do interior, exterior, concrete restoration, paint, remodeling, the whole 9 yards, and it takes forever, but when they do it, the values of the building shoot up. The point here is that if you are looking at buying a condo and you're afraid of these expenses because you don't want to be paying for all these upgrades and having to go through this, just keep in mind that you're likely to pay for it one way or the other. You're either going to pay for it now by buying in the building and being a part of all the assessments and paying those assessments and then reaping the appreciation afterwards, or if you wait because you don't want to be a part of it, then you're likely to just pay far more for the place after it's all completed because now the values have gone up. So either way, you end up paying. It's just a matter of when and how. Kind of like when you buy a house that needs to be totally renovated, you get it on the cheap, you renovate the house and make the value go up. But a lot of people don't want to go through that flipping process, right, of getting the house up to standard. And a lot of buyers just want to walk in, turnkey, and pay the full price for it and let someone else do the work. So whichever option you choose, just remember that you're likely to pay one way or another. And speaking of paying one way or another, one other thing that we've been covering here all the time on the channel is this ridiculous insurance situation that we're dealing with here in Florida as well. I personally am finally starting to see the results from this and feel some of the pain, guys, because they have been talking about assessments throughout the entire state of Florida for insurance rates to go up. And this can affect all different types of insurance. And the first type of insurance that I'm starting to see a noticeable increase with is my car insurance. Now, I haven't been in an accident in at least 5 years. It might have been longer. Definitely had no claims in between now and then. I pay my car insurance with full 6 months up front. That way I get the best possible deal. They give you a discount when you pay 6 months up front versus paying monthly. And my last payment was $1,111 for the previous 6 months. Well, now that the renewal is here, the new payment is $1,363 for the 6 months. That's a $252 increase, or to phrase it another way that means a more meaningful impact, is a 22.6% increase over my previous premium for absolutely no reason. Haven't had a claim, I'm a safe driver, but why is this happening? All because of where I live. That's it, guys. I live in Florida and I'm getting hit with this increase just because I live here. So if you live in Florida or you're thinking about moving to Florida, then get ready for these increases, guys, because as a resident, I can tell you it's happening. A lot of people are already feeling it with the homeowner's insurance. Now it's the car insurance. who knows what's going to be next. One thing's for certain, the fees are going to be going up on things, and you need to really make sure you can afford these increases before even thinking about moving down here right now, because everything is just going up in price faster than anyone can believe. You know, the cost of housing has risen tremendously. Insurance prices up tremendously. Now car insurance prices going up. Utility prices here have gone up. The cost of groceries, services have gone up. Anything that you can think of costs more now here, which I know it costs more probably everywhere, but I feel like here it's hitting harder than in a lot of other places, mainly because for the longest time, Florida was a very affordable place to live, unless you're looking at some of the big cities like here in Miami. But, you know, outside of that, in the more affordable areas, it's been traditionally very affordable here. Now here's an interesting real estate topic that I saw come up today that I thought I would go over with you guys, and that is, what happens if you live next door to a house that is a total eyesore and the neighbor's not keeping up with the house? Is there anything you can do about it? Because people get tired of looking at that, and you know, I see that sometimes here on my walks, where you have one house right next to another one that's completely dilapidated or maybe even abandoned, while the one next door looks pristine. And that must really suck for the neighbor next door that does keep up their property. And I would even say that if the neighbor that keeps up the property nicely ever wanted to sell, then this could even impact how much money they might be able to get for their house, because the next door house looks awful. They asked a real estate lawyer about this, and here was the answer. They said, property owners may use the property the way they want as long as they do not violate any rules and do not impair their neighbor's right to do the same. Lawyers use the term nuisance to describe a situation where someone uses their property in a way that interferes with their neighbor's peaceful enjoyment of their home. Examples of a nuisance can be things like unreasonable amounts of smells, smoke, noise, or water drainage onto someone else's property, even posting indecent signs or pictures, and potentially letting your property decay to the point where it's hurting your neighbor's ability to enjoy the property might also be considered a nuisance. The first line of defense that the lawyers say to do is to talk to your neighbor, and if that doesn't work, then if you live in an HOA, contact the HOA and let them get in the middle before you try to do anything, because a lot of times HOAs can enforce those different types of rules. You can even go as far as contacting the city to see if there's some sort of code violation for what they're doing wrong. And then, only after all of that fails, that's at the point when you should be hiring an attorney to get this resolved for you. You'll have to go to court, and if you win at court, the judge can order an injunction against your neighbor and basically force them to maintain the property to a minimum standard. And if the neighbor still doesn't comply, then you have to go back to court, and they will be held in contempt of court of the injunction order, which then has serious consequences, which may lead to further fines. I don't actually know what could happen after that, but the hope is that it doesn't go that far, because that will be a nightmare for everybody, including you, if you're trying to enforce this. Now, we all know that things aren't going so great for the economy at home here in the US, but it seems like our neighbors to the north, up in Canada, are having even worse of a time than we are here. In fact, the Bank of Canada recently just estimated that mortgage borrowers who renew their loans in the next few years are going to see their payments increase from anywhere between 20 to 40%, guys, because of how high the interest rates are now. Everyone has just gotten used to these low interest rates, and they based their housing affordability when they bought the property on the rate they had back then, not anticipating that the Bank of Canada would be raising rates to the point where they have, just like they're doing everywhere else around the world. And the reality is, you haven't seen anything yet, because by 2026, the Bank of Canada is saying that pretty much all borrowers are going to have to renew their mortgages, which are going to result in higher payments. So basically everyone that has a mortgage in Canada by 2026 is going to have to get a new loan, and that payment is going to be higher than it is today. This is definitely one great thing that we got going for us here in the US is having fixed rate loans, 30-year fixed rate, 15-year fixed rate loans that you can at least count on that you're never going to have to pay more than what you agreed to pay as far as your mortgage payment goes. Now, it is subject to go up because a lot of people have escrow accounts where they escrow your property taxes and your homeowner's insurance, and that's almost guaranteed to go up over the years. So it's not like your mortgage payment can never go up if you have a fixed rate loan. That's not how it works. But what it does is it guarantees at least the mortgage part of your payment is never going to go up. And that's a guarantee they don't have in many other places in the world, including Canada. But we haven't seen anything yet because the majority of people are not going to be renewing their mortgages until 2025 or 2026. And in Canada, here's the thing, guys, they've already seen home prices come down by 14% there before we've even seen this huge wave of people needing to get new loans over there. Which really, if you look at how much real estate costs over there, it's not that big of a surprise that prices are already coming down by this much because it seems so extremely overpriced up there. This is going to be bad because right now, the share of new mortgages with a debt service ratio of 25% or higher has doubled as of 2022. So literally 30% of all borrowers in Canada are paying more than 25% of their income towards their mortgage. And once it starts going up even higher, when it's time to get a new loan, you can imagine that a lot of people up there are going to be in trouble with this. Now in Canada, they have Tiff Macklem, who is pretty much the equivalent of Jerome Powell here in the US when you're talking about who's in charge of raising interest rates over there. And they're pretty much doing the same thing that we're doing here, planning on keeping interest rates where they're at, and they're a little bit lower over there at 4.5%. And he actually said it's way too early to start thinking about interest rate cuts. They have the same inflation target as we have here in the US of getting back to 2%. He also said that nobody should be expecting interest rates to go back down to the very low levels that we've seen over the past decade, that we're in a transition period to a world where interest rates are going to be higher than what many people have gotten used to. And I would say that is largely true here in the US as well. I do think, obviously, at some point, the Fed will pivot and they will lower interest rates, but I don't see that happening this year. At the very earliest, maybe the first quarter of 2024, but that's just a guess, guys. We really don't know what they're going to do. Given the current circumstances, it doesn't seem like interest rates are going to be going back down anytime soon. And it's really starting to show up in Canada because the share of indebted households that are behind on credit payments for the last 60 days has been increasing since the middle of 2022. And now it's to the point where people are actually carrying credit card balances that are higher than pre-pandemic levels to keep up with the cost of living there. I mean, does anybody else besides me think that this is totally insane and completely unsustainable? How can anybody reasonably think that people are going to get through this unscathed? That there's going to be no consequences from carrying all this credit card debt and having to get a new mortgage and everything costing more than ever. I mean, to me, it's all just a recipe for disaster, guys. And it shows in the numbers because all the households that took out a mortgage there between 2020 and 2022 are carrying 17% more credit card debt on average than people who purchased between 2017 and 2019. And I think it's probably pretty similar here in the US as well. A lot of people who are new homeowners are unfamiliar with how much it costs to own a home. In fact, let me pull something up. I saved this comment when I was answering comments the other day to give everybody an example of just how much things can actually cost, okay? And I saw this on my most recent buy versus rent video where I was giving detailed examples of how much it can cost to own a home over 30 years versus renting one. Now here's what somebody said. They said, we're currently doing replacements, so they're doing $5,000 it's going to cost for new water heaters, 25 grand for a new HVAC system, and 4 grand out of pocket for floor repairs after the insurance paid the rest of $45,000. They're lucky that their insurance paid a portion of these expenses, but obviously a lot of it came out of pocket, guys. You're talking $31,000 out of pocket for this homeowner for these things that needed to happen. Do you have an extra $31,000 right now? Would you be able to pay for this in cash without taking out a HELOC loan or getting a home equity loan or putting it on the credit card? Let me know. Put it in the comments, guys. Can you afford a $31,000 repair bill on your house right now, okay? Without even thinking about it. Do you have the money? My guess is probably most people don't, or they would actually borrow against the home's equity to do such repairs, because that's what the majority of people seem to do. They get in trouble with the expenses of the house. Oh, well, we have an extra $200K in equity there, so let's just go borrow some of that and we'll take care of it that way. More debt, guys. This doesn't solve the problem. And then when that runs out, or you have smaller expenses, people turn to credit cards. And we already saw in a couple videos earlier in the week how the credit card balances here in the US alone are already reaching close to $1 trillion. God knows what it is in Canada now. And Tiff Macklin over there in Canada says this about the economy. He says that if a severe recession were to occur, the balance sheets of Canadian banks could face pressures through credit and funding channels, adding that significant unemployment and a large drop in home prices could lead to a deterioration in asset quality and increased credit losses for banks. And with weakened market sentiment raising funding costs, banks would likely reduce the supply of credit to households and businesses, as well as that of liquidity to non-bank financial intermediaries. So what all this says in a nutshell is that the credit crunch is happening, it's real, and it's going to continue to happen as banks get squeezed into a tighter and tighter position. They're basically anticipating a big drop in home prices and an increase in unemployment, guys. And if you don't think this is going to happen here in the US, you're fooling yourself, because we're plagued by all the same problems right now. The only thing that we got going for us that they don't is a lot of people have locked in fixed rate mortgages, especially at low interest rates. So that's the one savior that Americans can hang on to right now. But unfortunately, since the vast majority of people live paycheck to paycheck and don't have any sort of financial responsibility, it's going to take a few little financial hiccups here and there and you're done, okay? Time to put the house for sale, can't afford to keep it anymore. That's just the way it seems to go. And the other thing that people have to understand is this recession is global, okay? So there's no way that the rest of the world is going to be in a recession and we're somehow going to escape it here in the US and everything is going to remain perfect. It's just not the way things are going to go. The rest of the world's economy affects our economy as well, and that was very obvious when we had all the shutdowns and the supply chain issues that happened during the pandemic. And you can see just how connected we are globally, and to think that when other economies and countries are in trouble, it's not going to affect us, you're fooling yourself. Now guys, I didn't ask anybody to subscribe or like this video, and I'm thinking about stopping for a while because I didn't do it for a very long time, just to see if it's gonna make a difference or not. So you may not be hearing me say it anymore for the next couple of weeks, just as an experiment to see what happens. But of course, feel free to do those things if you like my channel and you want to see it grow. And if you enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.